The big players in the booming Queensland coal seam gas business have been busily signing up customers for some time now, but potentially the biggest of all, Origin Energy's joint venture AP-LNG project, seemed to be lagging behind. But the agreement by China's Sinopec to buy a 15% stake in the project, plus $90 billion worth of gas over 20 years, means the project is a goer, with at least one processing plant, or train as they're known. Origin's project could end up accounting for almost half the $70 billion worth of projects to be built around the port of Gladstone over the next decade. I spoke to Origin Energy Chief Grant King about his plans. Well, Grant King, now that you've done a binding deal with Sinopec to sell 4.3 million tonnes a year, are you able now to move to final investment decision based just on that and one train?
Well, certainly it greatly enhances the probability we'll make that final investment decision. Just to be clear, that binding agreement has two conditions precedent, that is Chinese and Australian government approvals, but we would expect them to be forthcoming. The other thing we need to do to make that final investment decision is finalise our negotiations with our principal contractors that will deliver the project. So one never presumes all of those things will occur in a particular time frame, but we're clearly expecting that to happen, and we've indicated that sometime around the middle of the year that would be the case. But we're not totally in control of that timetable, particularly when it comes to government approvals.
So are you saying that you expect at this point to make a final investment decision in mid-year?
That's quite likely. We'll make it when we make it. And in respect of the prior question you asked, it's our intention to build a two-train project. We have the resource base to do that. We've clearly now got a one-train sales agreement, and we are, as we said, in respect to that first train, now in respect to the second train, engaged with customers whose requirements can trigger that second train.
What's the total CapEx spend between FID and first gas?
Again, that figure will be released at final investment decision, and that of course will be largely informed by the final negotiations with our principal contractors, so we've made no specific announcement on that at this stage.
Is it likely to be 20 billion?
It'll be that order of magnitude. These are very large projects. Clearly the two other projects in Gladstone have taken FID are of that order of magnitude, so you'd expect the number to be that order of magnitude. So these are big projects.
And can you fund your share of that?
We can fund our share of that. I think the question that interests people is, will we need to do a substantial equity raising in order to fund our share? And the quick answer to that comment is that from a liquidity point of view, we've got plenty of funds available to Origin, particularly with recent syndication of debt facilities. Once we know how much buyer equity is involved, how much project finance comes into the project, we'll know the residual funding task for Origin, and we'll clearly then look at the various sources of funds. We've got debt capital markets, we've talked about hybrids and use of our DRP to provide equity through the construction period. At the end of the day, there may be a requirement to raise some equity, but it probably won't be immediate.
You must have a bit of an idea in your mind now how it's going to look. I mean, you sit there presumably doing the numbers on a blotter, and you must get a sense of what you're going to have to do.
Look, we do have a sense, but going back to an earlier question, these are very large capital projects. Numbers can easily move around $1 billion quite easily. As you finalise those estimates, say today that we'll have a need for X, or $1 billion, or 1 or 2 or none, those numbers will still move around over the next couple of months as we go to FID. So